Dr. Hudson, what do you think is the single most important thing for people to understand about the current economic meltdown?
That it's going to get much worse financially, and that there has been no bailout of debtors at all, and that the debt problem is going to continue to deflate the economy, that employment will go down, and basically, if you want to see our future, look at what happened in Russia under Yeltsin's Russia, because the architects of Yeltsin's kleptocracy and depression are now in charge of economic policy here. Larry Summers, Geithner, the whole Clinton Rubinomics team is now in charge of our financial policy here. And they are just as right-wing as the European financial managers. They know that the game is up, and they're trying to grab as much public money as they can before people stop them from grabbing, and they're not trying to help the economy at all. They're trying to help themselves. And if you want to see a foretaste of what policies they were able to enact when they had a free hand in Russia, just look at what they did then and see whether they're going to try to do the same here.
You write that the supremacy of the banks and the financial sector took thousands of years to achieve, and that allowing economies to be crippled with interest payments was unthinkable until recently. How was this financial supremacy achieved?
Well, in the beginning, the first creditors in the first issue of money back in the 3rd millennium BC were the temples and the palaces of Sumer and Babylonia. And down through classical antiquity, most debts were owed to the government as taxes and user fees or tribute. If they were colonies, there was very little private banking as such, and almost no credit creation. That changed basically in the medieval period when kingdoms were formed, and they had to borrow for two reasons. One was to pay tribute to Rome, Peter's pence and other capital transfers to the papacy, and the other was for war. And it was the need for war that enabled private bankers to emulate the contract policies that the Templars and Hospitallers and other church orders had developed in the 12th and 13th century to finance the Crusades. And so in the wake of the Crusades, which looted Byzantium and brought gold and silver into Europe, very much like after Columbus discovered the New World, this created fortunes for Venice and for the large Italian cities, and their bankers developed, and then banking spread throughout Europe. And the idea of public debts, mainly war debts, came into being. These were completely lacking in antiquity. There was no concept of running into debt. All governments financed themselves on a pay-as-you-go basis. Sometimes palaces would borrow from temples, but the palaces and temples together were public institutions. There was no credit creation, and especially no free credit creation as a private monopoly to lend money to governments and extract interest that would be backed by taxes. All that is in the last few hundred years, and even as it developed, there was a response by the population at large that they had to prevent finance from just crushing the economy, and the laws from the 13th century down to about 1980 all favored debtors much more than creditors. The usury laws steadily lowered the interest rates. Bankruptcy laws made debtors' prisons a thing of the past and enabled individuals to wipe out their debts and start over. Truth in lending laws, regulation of the banks, and all of this sort of culminated in the 1930s after the financial system plunged the whole world into depression. Nobody really expected the financial sector to fight back and to be able to somehow convince the people that it was right to take over government, and centralized planning was all very good as long as the government did it. So the people somehow have bought the myth that a free market means a market free of government regulations, free for financial predators, free of the government to impose truth in lending, to prevent fraud, free of police over the the financial sector. And in fact, even in today's Financial Times, there's a report that the U.S. government has a prosecutor and has found almost all of the banks that have been receiving the government bailouts have been acting in a fraudulent way. Not a word in the American press about this, but basically the American large financial institutions, certainly the large banks, are all crooks. Citibank, Bank of America, Countrywide, all have engaged in deliberate fraud, wholesale fraud, and corruption. And this is being noted all over Europe. It's in the European press. Not a word of it here. It's as if the financial crooks are the only thing protecting us from a government takeover, whereas in reality, the government is the only organization and institution that can protect us from fraudulent finance and protect us from the new barbarians at the gate.
I'm speaking with financial economist and historian Dr. Michael Hudson. Today's show, The Financial Barbarians at the Gate. I'm Bonnie Faulkner. This is Guns and Butter. You have written that we are now emerging from a financially unique period of history. Never before have people believed that the way to get rich was by running into debt. 1980 was the turning point. What happened in 1980 to change things?
Well, interest rates were 20% back in 1980, and you had Reagan come in and begin to shift taxes off property and on to labor and consumer goods. So what happened was that what used to be taxes on wealth, taxes on the upper income brackets, and taxes on real estate now being freed, and whatever the tax collector refrained from collecting was available for bidders to bid against each other and pay as interest to banks in exchange for the credit to buy property. So all of this credit came into basically the real estate market and the stock market, and interest rates came down as Alan Greenspan flooded the market with credit. Down payments were reduced from the usual 20% down to just about zero. Instead of 30-year mortgages that would be paid off over the working life of people, you had zero amortization mortgages and even negative mortgages where the banks would simply add the interest rate onto the price. And finally, the biggest banks, Citibank, Bank of America, realized that they could simply falsify records and cheat people and write mortgages that had no relationship either to the property's value or to the debtor's ability to pay, and sell them to gullible European bankers who somehow had faith in America. And so you had the largest American banks essentially become criminalized organizations and put so much money into the real estate market that everybody thought, well, gee, all we have to do is borrow money at, say, 6%, and as long as housing prices are going up by 10% a year, we don't have to put any money down. We pay the 6% to the bank, and we get a 10% rate of return. We can simply refinance the mortgage every year or two and borrow the money to pay the interest. And for almost no money down, we get a free ride on asset price inflation. And this was Alan Greenspan's neoliberal idea of wealth creation. Wealth creation had nothing to do with increasing the means of production, increasing industrial investment, agricultural investment, or building infrastructure. In fact, it was dismantling investment and downsizing firms and carving them up. But what Greenspan did was simply inflate asset prices, and people thought that they could get rich somehow by financial engineering of the balance sheet rather than actual tangible investment or the kind of expansion of industrial capitalism that one reads about in all the textbooks.